Hey traders! Ever looked at RSI, saw oversold, and jumped in, only to watch the price crash even further? You're not alone. Today we're breaking down RSI, not just what it is, but how to use it smartly like the pros. Whether you're brand new or already trading, by the end of this video you'll know how to spot real signals, avoid false traps, and build an actual trading edge. So hit like, subscribe, and let's get started. RSI stands for Relative Strength Index. It's a momentum oscillator, which means it measures the speed and strength of price movement. The RSI scale runs from 0 to 100. When it drops below 30, we call it oversold. Price might bounce. When it climbs above 70, it's overbought. Price might pull back. But here's the key. RSI doesn't tell you where price will go. It tells you how strong the recent moves have been. Think of RSI like a fuel gauge. If it's near 100, the market's running hot. If it's near 0, it's cooled off. But remember, just like fuel doesn't tell you which direction a car will drive, RSI needs context. Now, let's talk about some common RSI mistakes that trip up beginner traders. Mistake number 1, trusting RSI alone. You see RSI at 30 and think, great, time to buy. But the price keeps falling. Why? Because RSI is just one piece of the puzzle. Mistake number 2, using the same RSI setting everywhere. The default 14-period setting might work on a daily chart, but not on a 5-minute chart. Always match the RSI settings to your trading style. Mistake number 3, ignoring the market trend. In a strong uptrend, RSI can stay overbought for weeks, and in a downtrend, it can stay oversold. So never rely on RSI without first checking the trend and price action. Okay, let's level up with some smarter RSI strategies. Strategy 1, RSI trendline break. Yes, you can draw a trend line directly on the RSI. When RSI breaks that line, it often signals a shift in momentum before price reacts. Strategy 2, RSI plus price action. If RSI touches 30, don't just enter. Check if price is at a strong support zone too. The more confluence, the better the setup. Strategy 3, watch the 50 level. If RSI bounces off 50 and moves up, that's a strong continuation signal. If it breaks below 50, momentum may be shifting to the downside. These tweaks can turn RSI from a simple indicator into a precision tool. Now let's talk about RSI divergence, one of the most powerful concepts in technical analysis. First, bullish divergence. This happens when the price makes lower lows, but RSI makes higher lows. This means sellers are pushing the price down, but the strength behind that move is getting weaker. That's a sign the price may reverse upward. Next, bearish divergence. This is when the price makes higher highs, but RSI makes lower highs. Here, the buyers are pushing price up, but RSI is showing that momentum is fading. This can signal a potential drop. Always remember, RSI and price usually move together. When they don't, that's your clue. Look for divergence near support and resistance zones for better confirmation. Let me show you how I used RSI in a recent trade setup. I was analyzing the chart on the 4-hour time frame. Price was moving inside a range, and RSI was slowly drifting lower, nearing the 40 level. At the same time, price touched a known support zone from a previous low. No panic. I waited. Then RSI bounced upward and price formed a strong green candle, breaking out of the range. That was my entry signal. I set a tight stop loss below support and targeted the next resistance level above. Within the next few hours, then the price moved up, hit my target, and I locked in a clean 2-to-1 reward to risk trade. The key here, I combined RSI with support and waited for confirmation. No guessing, just structure and patience. Now let's look at some pro-level RSI settings. Tip number 1, change the default levels. Instead of 70 and 30, use 60 and 40. This helps filter out noise. It gives more reliable signals in fast-moving markets. Tip number 2, adjust the RSI period based on market conditions. In quiet markets, use a shorter period like 6 or 9. In volatile markets, stick with 14 or 21. Tip number 3, use multi-time frame analysis. The weekly RSI gives the overall trend. The 4-hour or 1-hour RSI helps with entry timing. Combine them for stronger confirmation. These small adjustments make a big difference. Let's quickly recap what you learned today. 1, what RSI actually measures. 2, the mistakes to avoid. 3, RSI divergence and how to spot it. 4, a real trade example. And 5, pro settings used by serious traders. If this helped you, click like and subscribe. And if there's a stock or crypto you want me to analyze, drop it in the comments. And always remember, indicators don't control the market. They guide you. You control your trades. When you understand what the indicators are really showing, see you in the next video.